Corpina, Senior Managing Partner at Meridian Equity Partners. He joins us from New York. Jonathan, thanks a lot for joining us. What is your view on the setup for U.S. stocks in 2025?
Good morning. Thanks for having me. Yeah, we're finishing the year strong. We've had a lot of support in this market, support in our economy. We've gotten through some important dates on our calendar as we got throughout 2024. We got the election out of the way, and I think it kind of didn't matter who won as long as we just kind of moved forward from that. We've gotten a few rate cuts out of the way on our calendar here. So I think we're setting ourselves up for a good 2025. It's going to take a little bit for the Trump administration to come in, start putting their policies and procedures into place. Give us a few quarters to kind of get through that, and then I think we're going to continue to see this market move higher.
One of the big things investors want to see is earnings, some pretty significant earnings growth, double-digit earnings growth. I think the call is something between 11 and 13%. Do you think we'll see strong double-digit earnings from S&P 500 companies?
Yeah, I think the bar's kind of set a little high for that. I think we need to manage expectations, right, and not get too overboard on something like this. We're still in a fragile economy, right? We've only had 3 rate cuts. We still have a lot more to go. Companies are still trying to figure out what the new environment is going to be, what the new administration is going to look like. So I think we really need to take this kind of on a slow path as we get into 2025. Yes, earnings historically help the market. They buoy the market. It gives us very good insight as to what's going on within a quarter, and then more about outlook moving forward. But I think we just kind of need to manage those expectations accordingly, not get too far ahead of ourselves, because there's a lot that can happen next year.
What's your call on the price of crude? Gesundheit. What is your call on the price of crude oil in 2025, particularly given Donald Trump's posture? It often gets expressed as drill, baby, drill. Does that mean higher supplies of U.S. oil, or are big U.S. oil producers more disciplined in the way they deploy capital and with a greater focus on returning capital to shareholders?
Yeah, we've been kind of stuck in this range, and I think the overall mantra is to drill a little bit more and use the resources that we have. Clearly, that's going to add price fluctuation when we talk about oil, such a high and important commodity. In the Middle East, they clearly have a strong hold on oil prices. I personally feel like they're able to kind of turn the knob to get oil to whichever price that they want. We get it up towards the $80 level, and they open up production and get that price back down. So I think in 2025, with our relations with the Middle East, with what's going on in the Middle East, how Trump is going to use his influence on the Middle East, it's going to be very interesting to see how oil prices come into play there, and then bringing as much as we can back home.
What's your take on the U.S. financial sector, the banks?
Yeah, financial sectors is really setting up nicely, right? We have a very pro-business administration coming in. We've got a very pro-M&A administration coming in. I think we're going to see a lot of M&A activity as we get 2 quarters, 3 quarters into 2025. We've got a lot of companies that are waiting to IPO and to come public. That's been really put on pause for quite some time. I think we're going to have a lot of M&A activity next year, and that is a direct translation to the financial sector, top line and bottom line.
Jonathan, thanks a great deal for this conversation. That's Jonathan Corpina, Senior Manager.